So we'll go on to wedges now. Okay, and wedges are reversal patterns. So unlike our previous chart patterns we've seen, these occur at the end of trends and they switch the current trend to the opposite trend. Now, just like continuation patterns, it doesn't always work that way. You can still get them as continuations and they can still fail as reversals and the trend continue. It can happen. It's just more often than not, if you're in a bull trend and you see a rising wedge form, you might, and that breaks down, you might expect that it's going to test your lows, right? So I'll show you what I mean on the chart here, okay? So we'll say we're in an uptrend, right? Maybe we had an uptrend and then we formed an ascending triangle, right? And then we broke out above that and we had another nice trend, right? But then as this trend is increasing, perhaps we start to make shorter pullbacks and longer strides with shorter pullbacks. At this point, you're watching kind of the same thing you're watching at triangles, right? You're making higher highs, higher lows. And as it gets tighter and tighter, it's going to get easier for the bears or bulls to switch this trend, right? As you get closer and closer, it's going to take less and less for one big seller or a big, large number of sellers to push through this higher low. All right, and then you've got lower lows, okay? And so either you're selling the breakdown or you're selling the retest if you get it, because you don't really want to be selling into higher highs because that trend can go on much longer than you think. You really have to wait for the breakdown on these reversal patterns. Okay, and the falling wedge, gotta be change back to red here. The falling wedge in a downtrend looks something like this, where you're still making lower lows, you're still making lower highs, your trend is still continuing, but you're getting tighter and tighter and tighter. The moves are getting smaller and smaller and smaller until either you just break down on large volume or your trend of lower lows and lower highs stops and you make higher lows and break out. And the higher low after that breakout is the one you buy. Okay. So hopefully that makes sense on the wedges. Similar to the triangles too, on the breakouts, you want to see good, strong volume. Same thing with the retest. If you get something weak, that's not a good sign from the buyers when they just put in the first, if you get the first higher high or higher low here and it's on weak volume, that's not really saying much about the strength of the bulls or bears there, right? You guys following along here, okay? It's not like volume's not particularly important, but you want to really watch on the breakout, okay? Without an expansion of volume, the breakout will lack conviction and it might fail, okay? And these don't always work out, and you'll have them where they'll work out and then fail. And that's when it'll really get trapped. So you just gotta be careful on it, okay? All right, so that's got wedges done. We'll do double tops and double bottoms next. So they're exactly like they sound. Double bottom is just hitting that same horizontal support level twice and bouncing off it. And right as you break above the level you bounce to from the first bottom, right? That's when the double bottom is confirmed, and that is your reversal, okay? And then same thing, and this can go on as many times as possible. Maybe you get rejected here and you just come back down and you make a triple bottom and then break out. Or perhaps it even happens a fourth time and then you break out. But we got to keep in mind that, like with Bitcoin, as you come into a level more and more, it gets weaker and weaker. So you're not, if you're getting a triple bottom, quadruple bottom, you might want to consider that this could be a rectangle that's just going to continue the downtrend, right? But, if you get 2 or 3 and then a breakout, or even 4, you can get as many, as long as it breaks out above, that's a double bottom. And then you're either longing the breakout or longing a retest when you get it. Double top is the same thing in an uptrend. You just stop out at a resistance level, and when it breaks below support, that's your short signal, and that's when it's confirmed, right? Okay, so we got double tops, double bottom, and then we'll finish off with the head and shoulders and the inverse head and shoulders. So you guys might have heard of this one before. It's pretty popular. But the head and shoulders is essentially, it occurs in an uptrend when you're making higher highs and higher lows. And then you make the same high or low again, and you come in and make a lower high at the same level you made a higher high previously. And then once you break what is called the neckline, right? You think about this, the shoulder, the head, the shoulder, the neckline, and there's the body, the arms, the legs, right? That's the idea behind it. Head, shoulders, okay? And when you break this neckline, that's your short signal, or on a retest here, okay? And then the same thing goes for a downtrend, like so, where you stop making lower lows and you make a higher low, and then the break of that neckline is your confirmation, right? Then, if you're in a downtrend, it's okay to buy a higher low, but you got to be careful until you have higher lows and higher highs. So that's why you wait for confirmation to buy that. All right. And lastly, we're going to talk about how to measure these moves using something known as the measured move. So for the first advance to qualify as a reversal, there must be evidence of a prior downtrend to reverse, right? So let's say we get a reversal off this inverse head and shoulders here. I wish I had an eraser tool. Maybe I do it on blind. I don't know. I'll just delete it and draw it again. Let's say we have an inverse head and shoulders. Okay, boom, we break out, and then it rallies. Let's say this is, we'll look and see how much it is. This rallied 119%, and then maybe it starts to form an ascending triangle, okay? At this point, I'm looking to play long. When this breaks out, I want to go long. All right, I go long. What's my next target? Right? So the idea of the measured move is that the second leg after a continuation pattern is going to be at least as long as the first leg. So in this case, the first leg was 120%. The idea is that the next leg will be at least 120%. And you can either use from the measured move from the bottom of the reversal, from the shoulder, or from the breakout point. That's totally up to you. I believe the standard way is from the breakout point, right? Okay. So that is the idea behind the measured move, right? So nice big leg up, consolidation, same leg up, or since we've done the video on it recently, what I prefer to use are Fibonacci's. And I will take the high of the continuation pattern and the low made after that and use a fib extension for my targets, right? And if you guys don't have these extensions on your fibs, you can double click and then use check marks in these boxes to add them. Okay, I use one, here it is, the 1.272. That wasn't on there for some reason. The 1.272, the 1.618, the 2.618, the 3.618, and the 4.236, right? If you guys need to, pause the video, go throw these on your fibs. They're awesome. I use them all the time. And we'll see the first move of this breakout will likely be to the 1.272 or the 1.618, one or the other. And whichever one it goes to, the other might act as support resistance, right? And the absolute maximum I would expect from a move like this would be to the 4.236. It's pretty rare you see something go up that high without at least some form of pullback. Okay, so that's how you can use fibs, using anchor points at the top, right? The top to the bottom of your continuation pattern. It looks trippy having them kind of overlap. Let me just delete that. And then the 1.272, the 1.618, the 3.618, and the 4.236 are the extension fibs to use, right? So just to summarize, we've done the ascending triangle, right? By the breakout. We've done the descending triangle, short the breakdown, done the symmetrical triangle. Looks like a bird beak. Short whichever direction it breaks, or sorry, buy or sell depending on the direction it breaks. Then we've done the rectangles, flags and pennants, and the cup and handle. All those make up the continuation patterns. And then we did the rising wedge, falling wedge, double tops, double bottoms, triple tops, triple bottoms, the head and shoulders, the neckline, right? And the inverse head and shoulders with a neckline. But I think you guys will really find if just focusing on the higher lows, the higher highs, the lower lows, the lower highs, focus on the technical market structure, and that is going to serve you well. Patterns are great, and they're important, and they can certainly be profitable. I think they're a great part of a tool set. But they're not everything, okay? And that's why we're gonna have my favorite kind of stuff in the boss strategy section. Okay, but for now, we'll just keep it at simple TA. Learn chart patterns. You're gonna see them. People are gonna talk about them, and you might like them. They might really be part of your trading edge. Okay, and that's what's really important here, is developing a trading edge. All right. So that's gonna be all for chart patterns, guys. I hope you really enjoyed that. I will catch you all in the next video. Peace out, boss traders.